China continued with its anti-inflation battle last week with another hike in reserve requirements for the country's banks. This is the third such move since September. Joining me to talk about this is Puru Saxena of Puru Saxena Wealth Management. He joins us from Hong Kong. Puru, your thoughts on China's move?
I think interest rates are going to go up in baby steps, but more importantly, the Chinese are tightening the credit growth. For example, they've recently raised the bank's minimum requirements another 50 basis points, and this is the fifth tightening or hike this year alone. And the Chinese are extremely worried about inflation, in other words, increases in food prices, and they're extremely nervous about property speculation on the mainland and also in Hong Kong, where I live. And recently, the Hong Kong Monetary Authority has also taken many steps to make sure that this speculation stops dead on its track and it doesn't get any bigger, because the bubble is already very inflated. And recently, the Hong Kong government has increased the down payment required for new properties to 50%. They have imposed a 15% stamp duty on profits if you buy a property and flip it within 6 months. So you'll have to pay 15% duty, and they're taking a number of measures to make sure that this property bubble doesn't get any bigger. And I suspect interest rates are going to go up. And this is really a symptom of the loose monetary policy being adopted in the United States, thanks to the Federal Reserve, because by dropping interest rates to zero and printing money like crazy, they are forcing investors to look for higher yields elsewhere. And as a result of this surplus liquidity in the system, money is pouring into China and Hong Kong and in Asia in general, which is growing at a much faster clip than the developed world. And these are spawning big asset bubbles, which the Chinese government is desperately trying to control.
And Puru, what other factors are you looking at right now that can influence the markets?
The single most important thing is the direction of the US dollar and also the monetary policy in the United States. Obviously, quantitative easing is extremely favorable for hard assets, because if the Federal Reserve continues to print money and lend this money to the US government, which will ultimately spend this money in the economy, hard asset prices are going to go up. Whether rightly or wrongly, I don't know. But I just believe in this leveraged world, Daniela, you have to watch monetary policy very, very closely, because whenever the central banks encourage speculation, whenever they drop rates to zero, whenever they print huge amounts of money, all asset prices rise in tandem. And this is what we observed between 2003 and 2007, when the monetary conditions reversed, when the dollar started to rally.
Puru, if we switch our attention now to silver, last week it was on a high, then it corrected. In the past, it's known for having corrected from $20 down to $9. So how do you play such a volatile market?
Well, the way to play silver is to trade it. You can't really buy and hold it for the very long term. The price of silver starts jumping in leaps and bounds, and this is what we saw up until about a week ago, when silver was going up significantly day after day after day. And if you look at the price of silver, at one point it was roughly 45% above the moving averages, and that basically is a symptom or sign that silver is extremely overextended. And we bailed out of our physical silver positions about 10 days ago, when the price of silver was still above $28.50. Our timing was off by 1 day from the peak, but we've done reasonably well, and now we are waiting for a reversion back to the mean, which are the moving averages. Even though the price of silver has gone up a lot on Thursday, the 18th of November, I think it still has further to go on the downside, simply because the US dollar is rallying.
All right, Puru, thank you for joining us from Hong Kong, and thank you for watching. Stay tuned to Kitco.com for all your precious metals information. For Kitco News, I'm Daniela Cambone.